Let's talk about on the other side, another announcement with these Trump accounts that were just announced again in another effort by the administration to do something about lack of savings. And more interestingly, and I've heard it put this way, as a way to get everyone participating in the equity markets. One of the things that's going on right now is we have a dichotomy in this country. And aside from the huge political divide, one of the observations is we have folks that are participating in the equity markets, meaning they've got 401k accounts, they've got IRAs, they have brokerage accounts, et cetera, where they are benefiting from the appreciation of the stock market, which continues to hit all-time highs, even now. And with all of the concerns going on in the world, with all of the fears that people have about different issues, the stock market continues to go up and to the right. And so 38% of the country is the number I think I heard still doesn't have access to the markets, meaning they don't have any kind of retirement plan. They don't have any investments in the actual equity markets. The idea here is that the other part of the country that doesn't have access to those markets and isn't enjoying the upside is really feeling the crunch of persistent inflation, the cost of living, the cost of housing, the bad advice they got on student loans. And so they just see the downside of what's going on in our economy right now and aren't enjoying that upside. So the idea with the Trump accounts is to actually open accounts for children who were born between January 1st of last year of 2025 and December 31st of 2028. Any U.S. citizens born between those dates have the ability to open up an investment account where the federal government will deposit $1,000 into that account, and that money will be invested in low-cost index funds. And the idea is folks will be able to, from birth, start participating in those equity markets. And just like most things, the hope is, at least I think, is if you have investments in the market, then you're going to pay a little bit more attention to that. You're going to see over time how that compound growth works. You're going to see how the market fluctuations up and down affect your account balance. And you're going to have the ability as a family or other interested parties to be able to put additional money into that account, up to $5,000 a year, that will grow tax deferred for these children. With the idea being that at 18 or sometime after that, you'll have a pot of money that has been growing for the first 18 years of your life that you'll also be participating in those markets. So it's really a head start. I think some detractors would say, well, it's not really that much money, but I think the idea more is just to have more of our country participating in the markets so that they can see the value of that, because we've moved to that model, right? It used to be that you went to work, you got a pension, the company put the money in that pension for you, and then they gave that money to you or paid that out to you through your retirement for the rest of your life. And it wasn't something that you had to pay any attention to. It was done for you. And about, I guess, close to 30 years ago now, maybe even a little longer, we really started this shift away from pensions to 401ks, 403bs, retirement accounts, defined contribution accounts, where the employee was responsible for saving a portion of their income to put in there to take care of themselves in retirement, in addition to our Social Security. And so I think this is just another way to get more of the population, because it's available to everyone, to start benefiting from the stock market, which is one of the most common ways for folks to be able to build wealth through their lifetime.
And what's interesting is the idea that it's not a lot of money. And, if it's $1,000, it probably, maybe I know it seems like not a lot, but at age 65, even at a really conservative, like 7% annual return, that would be $81,000. So now let's say that it ends up being more like 10%, which is where the market is averaged since World War II. That's more like $490,000. So, and that's starting with $1,000. You earn 10% a year. You add nothing additional. And you do that for 65 years. So that's 490,000. So the reason I think that's really significant is it's like 43% of working adults have no retirement savings at all. And so you think that if the alternative is to be at zero or to be at $400,000, $500,000, That's a huge difference in quality of life because we would say that if you had $500,000 in retirement savings, you can afford to pay yourself whatever 20 grand a year or so just off your own interest from that account. And that's pretty significant because the average person getting Social Security is probably getting 2 grand a month. And now you're saying you can almost double that just from this Trump account by the time that you retire at age 65. So it may not seem like a lot, but I think that the time of that, it can make a difference and it can make a real difference. But even more important than just the financial impact, like you said, is helping people feel like they can own things. And I think that's really hard. I mean, housing feels expensive and everything feels expensive to people. And I think that when you kind of get in this doom cycle of thinking, sometimes it's hard to see that it's probably never actually been easier to build wealth. It's just that there's a huge emphasis on building it fast. And it's never been easier to do it in general, but it doesn't have to be overnight. And this would have a big impact and hopefully help people think about wealth longer term.
Yeah. And give folks hope. And the other cool thing that I think is coming out of this, and I think we'll see more of this, is the private sector involvement, right? Michael Dell and his foundation announced $6.25 billion that they're going to put into these accounts for kids, right? There's major employers, BlackRock, Schwab, Charter, Visa, MasterCard, a lot of these places, Uber, a lot of these companies that are going to match those dollars as well. So it's the easiest way ever for outside interest to be able to support children directly, right? It can go right into that. It's very clear. It's cordoned off. You can't touch this money before 18. You hope, I mean, with all of the fraud concerns going on, that this is a direct way to give people this money, these children money that can't be touched or manipulated or in any way taken advantage of. And that's pretty cool too. And so I think you'll see more of that because what a cool gift for an employer or for some of these foundations to really pour into that next generation as well. And Secretary of Treasury Scott Bessent even announced that their department will be rolling out some financial literacy around these accounts as well. So they are making efforts to not only fund this, but to also try to involve some of that education so that it can be as valuable as possible.